The others we can get it now. Like the IB. Yeah, for the IB. So we need the initial one with the highest commercial output for you. Everyone will guess, but let's prioritize. Yeah.
Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. You're here today with, my name is Norbert Kiiza, the education partner for FX Pesa here in Kampala. And I hope you're all doing awesome today. We have had quite a number of developments that we'll go through. One, of course, of the major ones has been the FOMC conference, which we had last week, and we are seeing much of the movement we are seeing on the different assets is majorly because of that conference, and the direction is majorly unchanged for many of the assets. As you can see, most of you have been able to see what's happening with the DXY. Of course, the major thing that we are seeing is there seems to be a lot of weakness for the Asia currencies, and we are seeing that happening across the board. Kelvin, you're saying you can't hear my voice? Let me just check that quickly. They can hear me. Just kindly confirm. Just write in the chat section if you can hear me. Just type that you can hear me if in the chat section. Yeah, so this is an article from the Nikkei. They're telling us the weakness of the Asia currencies, and I think the weakness has been quite broad. If you check on the Australia dollar, thank you, Jack. Yeah, so Kelvin, just try and check your check your side. It might be coming from your side. Yeah, so we've been seeing quite a bit of a slowdown in China, which again is also moving to the other countries on the side of Asia, that is Australia and New Zealand dollar. And we are seeing that movement is majorly because of the tightening that's happening over in the US. Most of the countries over in Asia, China, of course, and Australia, same thing also for New Zealand. They have not been quite as hawkish. They have been trying to see how they can really boost growth in their economies, but that hasn't helped a lot, and we are seeing quite a lot of weakness. So it's not only the Japanese yen, every single Asia currency is having a bit of subdued weakness. So we are seeing rather subdued strength. We are seeing that for the New Zealand dollar, for the Australia dollar. We're also seeing that happening also for the Chinese yuan. So if you're trading that, and again, if you go on your trading view of even on MT5, you should be able to track that, where you add an Asia currency and put that alongside the Chinese one for you to be able to track and see that. Yeah, so crossing over to the calendar, we don't have that much events today. Much of what we are seeing here, we have a bit of data that has come out from the Eurozone. There's a lot of slowdown in the Eurozone, and the spillover from China is also moving over to Europe. That's why you are seeing that the euro dollar is having a lot of weakness. Same thing also for the pound dollar and also for the other Asia currencies. So we are seeing here, we got some data coming out from Eurozone. That was during the London session, and we had a decline there of the GfK German consumer climate. And again, keep in mind that most of the data we have been getting from one of the strongest economies in the Eurozone has been pointing to a slowdown and contraction in the economy. We are seeing that slowdown happening across the board. PMIs, both services and non-manufacturing, rather services and also manufacturing PMIs. We're also seeing the slowdown also in GDP. We got GDP coming out. We had GDP coming out for the UK last week, and you saw that the impact on the pound dollar was very strong. We are having the GBP USD reaching levels that we did not see until the beginning of the year, and that is most probably going to continue, and we shall go over to the charts to see how that is progressing. When we check later in the day, we have some data coming out from the US, which is the core durable goods order. And again, this is high impact, so we should see how that affects DXY. Keep in mind that by far and large, the market bias is largely still intact. We are seeing that for the DXY. We are seeing the DXY has been quite strong, and we are seeing very, very strong pullbacks across the board for many of the measures. Euro USD, GBP USD, AUD USD, and of course the NZ dollar has, US dollar has also been pulling back quite strongly. We have crude oil inventories coming out from the US. The crude oil inventories for the previous weeks have been negative. And the reason for that is that we are seeing a bit of higher oil prices. However, the US government, and again, even all the different agencies over in the US are trying to find a way how they can try and stabilize the oil prices. But we are seeing Russia recently banned the exportation of diesel products to every other country in the world aside from 4 countries which are around it. That is Armenia, I think Kazakhstan, and Belarus. And there's also another country which of course is around Russia there, which has skipped my mind, but there are about 4 countries. So we are seeing that tightness in supply, and that is also reflecting in the oil prices. So the crude oil inventories data that we might get, which are going to get at 5:30, will then of course allow us to see how oil prices progress. We shall also be able to check the chart for oil and see how that is moving. I think that is literally for the chart, rather for the economic data. So I want us to quickly go over to FinViz. For those of you that are trading the Nasdaq, and also even if you're trading the Dow, then I want to also be able to indicate to you or to show you here what is happening with the stock. So we are seeing quite a very strong weakness for the different stocks. And yes, yeah, just type in all your questions, type in all your requests, and I'll be able to handle them after the snapshot. So I want to quickly go to groups so that we can be able to see what is happening with the stock market. So the US stock market has come under intense pressure of late, and the reason for that has majorly been because of what is happening with potential or impending shutdown by the government. And again, why that is very, very crucial is because the Fed in their most recent meetings and conference, Powell indicated that they're going to remain largely data dependent. And what that means is if you have a government shutdown, you have data coming in late, okay? And sometimes also you might have revisions of data where you have the data which is released is not really accurate, and you have to go back to, do a quick check again. So one thing that I want to mention for those that are trading other indices, keep in mind that there seems to be a big pileup of short positions. And we are seeing that reflect with intense selling. Yesterday during the US session, we saw the kind of selling that we are seeing on the indices. It was quite intense, and it's a no-brainer that we are seeing some kind of implication for that across the board. So we had this coming out yesterday. We are seeing City Strategies saying that short positions are piling up in the Nasdaq futures, and we're also seeing that the call to put option ratio is so skewed towards the put side, which means that many of the hedge funds are piling up into short positions. Now, again, we're also seeing that a lot of the different stocks are having major pullbacks. Apple is one of them. Nvidia is also one of them, and these are also big components for the Nasdaq, the Dow, and also for the S&P 500. Okay, so we should see that happening. So here we are seeing that the put versus call open interest has hit the highest since November 2022. So despite Nasdaq being in a bit of a bull run this year, we are seeing that there seems to be a review of the positioning by most of these big players, and they could be pointing towards larger short positions as we go towards the start of Q4, which is now October. Yeah, so that's a bit about that. So I'm going to quickly now go over to the group screener so that I can just take you through what the relative performance is for the different sectors. So as we shall see on the chart, when we cross over to the charts, I'm sure most of you have been seeing what is happening with the indices. Very, very strong downside momentum there. Very good entry points for most of you. You should be able to see how you can utilize this opportunity very well. So when you cross over, when you go to the 1-day relative performance, I want to fix your attention to where you're seeing technology there. Okay. You can see technology is down by 0.84%. So which here we are considering just one market day, which was yesterday. And when you cross over to the 1-week relative performance, you can see that technology is down about 4.39%. Very strong downside there. And also we are seeing that decline happening for many of the other sectors. Okay. It is only energy which is seeming to hold up quite nicely. And the reason for that is because energy companies tend to thrive well when oil prices are high because you pay more for fuel. It's as simple as that. When you're paying more for fuel, then it means that their forecasted earnings are going to increase. Okay. The forecasted earnings will increase and therefore investors will want to pile up there. Okay. So this is important for you because then you can position yourselves better, but also then you can know on what side is there is the market more skewed to. So I think with that, let's cross over to the charts. Kindly, if you have any questions, just type them in the chat. I will handle all your questions. I'm seeing quite a number of them there. I'm seeing Butin, I'm seeing Mercy, Elijah. I will handle all your questions. So just type them there and then we shall handle them. Yeah. Okay, so let's cross over to the charts and see what is happening on the markets. So we are going to start with GBP USD. You're going to see the chart in a moment. You see the chart in a moment. Yeah. So GBP USD, I think by far and large, again, we have to avoid analysis paralysis. We can't analyze the charts, every single second or minute. Sometimes sentiment is still the same. Sometimes the market still has that kind of movement that we are seeing. Okay. So for the GBP USD, we have been on the downside for quite some time. Most of you that have been attending that have been attending the snapshots, I'm sure you have been seeing how we have been providing a lot of setups for you to actually utilize that downside. So GBP USD is really dragging back quite strongly. The 200-day moving average has gapped even higher, and the reason for that is that the larger the gap, the larger the intensity of the move. Okay. Now, when you see that this gap was actually quite strong, whether quite small between the shorter period moving averages and the longer period moving averages, this move from this increase in gap is a move of over 350 pips. Very large movement, simply indicating to you that the market is skewed towards the downside. Goldman Sachs released the report last week, and they were indicating that they are potentially going to increase their short positions for the pound across all the different pairs. And the reason for that is anticipated continued weakness in the economy there. So GBP USD could continue having some selling intensity there that could push it lower and lower. Keep in mind that the pound dollar is up around 11% on the year. So we are still not at the discount levels that we are expecting. We could potentially see a much stronger pullback. If we fix our eyes from the January move, okay, the January move is somewhere here, a move of about 11%, okay, and about 1,300 pips. So when we switch to the top of the level and we see where we are, from the peak to date, we are seeing a move of about 7.4%. So this means that we could potentially see a much bigger pullback. So on the daily, the 200-day moving average has just crossed the 50-day moving average, which is also a strong indicator that GBP USD could continue its pullback. Now, last week before the FOMC conference, you are with me, and I guided you and said that if Powell is hawkish by any chance, then we can potentially see a very nice pullback happening for the GBP USD. Okay. Yeah, keep writing your questions. Just squad, you're writing something there regarding gold. I will handle that. I think that issue has been handled by the company, so we are going to be able to you're going to have all your issues sorted with that. Yeah. So coming back to Nasdaq. So Nasdaq again, Nasdaq right now is in a very, very nice supply liquidity area, which is nice for us because it can allow us to potentially look for some entries there to the downside. When you zoom out your chart here, you're going to be able to see that Nasdaq has achieved this level that it was last at around 18th of August. And I expected earlier during the week that we would have a break of this area, which of course we did very nicely. And we had about 3 crossovers to the downside of the 200-day moving average, simply indicating to us that the downside movement for Nasdaq is still quite intact. Before I move to the charts, I earlier showed you how city strategists were indicating that the hedge funds were piling up short positions on the Nasdaq futures. So that means that we should see the impact of those big players with the chart, and we have already seen it. Nasdaq so far has shaded a very big area of its gain and is currently down about 6% from when we had the FOMC conference. So right now we are seated in a very nice supply liquidity area where if we break below, we are going to have Nasdaq having very strong selling, taking it to levels that it saw sometime earlier in the year. Okay. So we most probably could the next area for movement on Nasdaq would take us down to this area here of June. But for now, we need to observe how it plays within this area here of this liquidity. If it breaks below it, then we're going to have a much stronger pullback. I want to also fix your focus on the OBV, which is also showing us decelerating volume for the pair, rather for the index. And what this means is that we could see Nasdaq potentially intensifying with its sell to the downside. Crossing over to Dow on the H1, Dow has had very nice setups. Okay, from when we had the FOMC conference, we had a pullback which took us all the way down here, and right now it's a move of about 3%. Now the other thing that I also need to mention is keep in mind that we had Fitch ratings. The Fitch essentially what it did is that it downgraded the US credit rating. That was sometime I think in June. Historically, what happened is that the last time the credit rating has been downgraded by a company, we normally see a pullback of around 11%. So the indices seem to be now moving in that regard. But we are yet to see the bottom of this movement, so we could see some more selling coming in, especially as we enter the new month. So here on Dow, we are seeing quite a number of flags. The flags are simply showing us that the selling intensity is there. The most recent ones we had was this one and here, and I'm expecting that Dow is going to potentially have a strong sell to the downside and potentially take over this area here. When you go on the H4, you see that Dow is now shedding its entire gain from the Q2 earnings. And now as we get ready to receive Q3 earnings, that is in end of October, then we are going to potentially see how that reacts, okay? But for now, most of these US indices are really indicating very strong momentum to the downside. To speak briefly about Powell. Powell last week mentioned that they're going to keep the rates higher for longer, and the issue of inflation still has not been tackled, which means that we would potentially see the risk of sentiment continuing, which could then enable us to see risk on assets having very strong pullbacks as we go into the next quarter. So gold again, for gold, I know most of you have comments about gold. The issue about gold, I'm just going to post the statement here, but don't worry if you are affected during this glitch, you're going to have your issue sorted. Kindly read this statement here, which was issued I'm going to post it briefly. Just give me a few moments. That is for if you're affected by gold, okay? Don't mind. It is something that happens. It's usually an issue of a glitch. So don't mind about that. Your issue will be handled. So if you're affected by gold, just read this statement here. I'm posting it in the chat section, and you should have your issue sorted. Just a moment. If you have any questions, please type in your questions regarding the analysis. We shall go over those. Okay, so kindly read through that and take your time reading and understanding the steps you need to take for you to have your issue handled. See. Yes, I'm going to analyze it. Just give me a moment. Okay. Just give me a moment. Please read this. I'm going to post it in bits. So just take your time to read it. There is no big concern. Everything should be fine. Please kindly don't kindly, if you can, please don't type any comment as I'm posting the statement. That way we don't have breaking up of those words, of those words. Okay. Please, okay, guys, please do not type. Okay, please don't type. Just kindly bear with me. Don't type. And I believe this same guidance is going to be provided by your account manager. Okay. But if you are affected, then your issue will be handled. So read through that. If you are affected by that glitch, follow those instructions. You just need to raise a complaint and make sure you indicate your FXPS account ID, the order IDs. Every order you trade or every trade you take has what we call an order ID. So you should be able to check that on your toolbox. So when you go to your toolbox, say for instance, if I open up a trade on gold 0.01, I may be selling gold. Okay. that trade I've opened essentially has, now in case you're trading on MT5 and your ID is hidden, you need to show it, okay? So when you click show, it will be able to show your ID. You just have to click and that ID will appear, okay? Every single trade which you're taking has an ID. So those trades that you had open that were affected by that glitch, make sure you just indicate those order IDs and send a message to support@fxpesa, just like I've included there in the chat section. And all your issues will be handled in time. Okay. Now, when you're sending the email to support@fxpesa, please keep in mind that the subject of that email or the subject header should be support request trades affected on the 26th of September. Okay. Yeah, so it is just a normal market phenomenon that happens. This is not the first time it has happened. It happens all the time in the market to different brokers, and that issue normally is rectified. So it will be rectified and you should be able to have that issue sorted. So I hope that helps for those of you that were trading gold. So quickly for gold, as you can see here, we had a very strong pullback from the FOMC conference last week. That was simply because the statement was quite hawkish, and our recent analysis for gold has been a sell, as you can see there. And as of now, that movement is actually still quite strong to the downside. And we are seeing that we had a very nice break of our ascending wedge there. And again, we also had a very nice bearish flag, which formed before gold had a very strong momentum drop, which took it down by over 300 pips. And as of now, we are seeing that momentum still in the way. And where gold could possibly go, if you go on the higher time frames, you can see that gold potentially wants to go back to where it was in January this year, which was these areas here of 1864 downwards all the way to 1809. Okay. Now the only way gold could potentially switch back to a buy could potentially be if we get any weakness, if we get any kind of weakness from the DXY, then gold could benefit by having a move higher. But I don't expect that to happen. If you check on the DXY, you can clearly see that we are seeing some kind of weakness forming for gold. So the last area where I actually expected the statement to maybe take gold was this exit liquidity zone here, somewhere around 1951. But gold barely reached there, and that was because of the statement that we received from Powell. The statement was very hawkish, and we got an immediate sharp drop for gold, which again could potentially continue. So this area which we are seeing here, where we had the core CPI level around 1903 was broken quite nicely. Gold failed to hold above 1900 yesterday, and I'm expecting that we are going to see it potentially moving lower, and that move could take us all the way back to possibly 1864 and even lower to 1813. So again, let me just repeat it again. If you had any issue when you are trading gold yesterday, the issue that you saw was a technical issue, and it was simply because of what we call a phenomenon that we call off market prices. Okay. So if you are affected, if your equity was affected by any chance, please follow these instructions. Send an email to support@fxpesa, include your FXpesa account ID, and then also include the order IDs. Every single trade you take has an order ID. You can look for it on your phone, or if you're trading on your phone. If you're trading on the computer, you can also find it. Include those there, and just simply put that order IDs. Then also make sure you include the subject header so that we know that that email is specifically talking about trades affected. So once you do that, your issue will be sorted and you won't be facing any issue. So moving away from gold, we are going to also check out silver. Silver again is aiming for this supply zone here, which again will also boost any selling intensity for it. The only issue with it is that it is not having a lot of downside momentum as we are seeing on gold. Gold seems to be really focused on moving lower and quite strongly. But when we see silver, silver seems very hesitant and it's taking long to have that pullback. But we are seeing that the movement again is in line with any kind of bearish momentum. We had a very nice break of this asymmetrical triangle here, which was a very good entry point for us. And it did that also having the bigger period moving average, which is the 200-day moving average, crossing above the 50-day moving average, which again, technically is a very good entry point for a sell. And if we had gotten in right at the time of that crossover, then we would have gotten a move about 60 pips. So even now, we could potentially see the pullback getting stronger as silver progresses. Again, for the DAX, DAX has been having a lot of downside momentum simply because of weakening, some weakening that we are seeing coming in from the Eurozone. And the other thing is that the short positions for the DAX are also piling up quite strongly. There seems to be profit taking that came in earlier in the year when the DAX achieved its all-time high. And it seems that there's no new money flowing back into these stocks. That's why we are seeing this momentum that we are seeing. However, as we go along, this could potentially continue, and we could see the DAX moving strongly to the downside. Yeah, so I think that's really it. We just have to continue observing the markets. I want to go to USD JPY and just quickly show you what's happening with USD JPY. So there were some questions I saw earlier regarding USD JPY. And what essentially happened is that we expected a dovish statement, a hawkish statement from the Bank of Japan, but then they are still not confident of the inflation that they are seeing in Japan, and that is why we saw very strong rallying last week on Friday, simply because they say they're going to continue with their yield curve control program. So what that means is that usually with that program intact, we are seeing very weak Japanese yen. So traders right now should potentially look for some long positions here. As you can see, the upside momentum is quite strong here for the USD JPY, and it seems to me moving quite nicely, potentially showing us that there are some good opportunities for us to get in there. Yeah, so I think with that, let me just go through the comments that we are getting here and see how I can guide you guys. So let me see here. We have let me see quickly what we are seeing. So again, this indicator is the Keltner channel indicator, and it's used for breakout trading, okay? So you can use it even intraday trading. What happens is you only use it when there's high momentum and you focus only on the breakouts. Whenever you have a breakout candle, you look for a trade to the upside. Whenever you have a breakout candle to the downside, then you look for a trade to the downside. So it's a very nice tool and can be used by traders when they're looking for trades. So you can see here with this breakout here, we would have held onto this trade of about 74 pips, a move of about 0.5%, which is a very good entry point there for you. So let's just go through the questions. Yes, Philip. Suzebulunjo Suzotia, thank you so much. We continue. It's good to see Ugandans here. It's good to see you guys joining into the YouTube. Happy to see you guys. Yeah, so Elijah, you're asking about the gold upward and fall immediately. Kindly check the statement has been posted. The reason why you saw that movement on gold was just a simple market error, happens all the time. I think it's simply because it's not because of FX Pesa, but it's simply because of these off market prices. So the statement is here. Kindly read it. It's a technical issue, and any client that has been affected by that glitch should simply send an email to support@fxpesa.com, indicate your FX Pesa account ID, and then also include every single trade with its individual order ID. So the moment you do that, you're going to receive feedback from this email, and they will guide you on the next step forward. But please keep in mind that you're going to have your issue sorted. So I'm still handling the questions. Okay. So just follow my guidance there, guys. If you're on, we are saying kindly read the statement and send an email to support and FX Pesa. Your issue will be resolved. Okay. So we are here for you. Don't mind about it, clients. You're going to have your issue resolved. Okay. So we are still going on with the questions. The questions are quite many here. So I'm just going to go one by one. So Elijah, I think I've handled your query there. Your issue is going to be handled. We are progressing. J Squad, how are you doing? Yeah, it's been a minute. I hope you're doing awesome. J Squad, you're saying hi, Leno, but what I'm seeing on UST JPY sellers enter in the market, is that concurrent with what you're seeing on your end? Please shed more light. Yes. So J Squad, so UST for the JPY pairs, I believe what the Bank of Japan indicated, I would say they are going to continue with their yield curve control program. And essentially what that means is that we could potentially see stronger base currencies. So anything that is, just kindly see here on my chart, anything that is a base, okay, should go under some strong strength. And that's because the Bank of Japan is focused on continuing with their yield curve control program. And what this could mean is that we could potentially then see some weakness coming in for the JPY. Okay. So again, fundamentally speaking, there is not a grain of salt that is providing an indication that the Bank of Japan will change from there. They could continue with the guidance that they previously shared. If you cross over here, you can also see that the weakness we are seeing with Asia currencies is really, it's broad. Okay, it's broad, and the reason for that is simply because of the Bank of Japan. Okay, the Bank of Japan has indicated that they are going to continue with their yield curve control program. So again, if you're trading anything that is JPY, then you could potentially see this weakness continuing there. I like to follow usually proceedings from the Bank of Japan. I like to always follow those from Nikkei. Okay, so you can subscribe for it. And again, if you just want to read one article, I don't normally read a lot of articles there, but it normally provides to me some direction regarding to what Bank of Japan wants to do. So that could be a good it could be a good website for you guys to follow. So gold, I'm already done analyzing gold. I hope you guys were able to see that. If I go over to if JP Morgan is bearish on GPP, what of euro? Since Eurozone economy is still weak with a weaker interest rate parity. Yes, yeah, that is true. I think the interest rate differential is more skewed really on the side for the pound, since they have higher rates over there. But though the interest rate differential the interest rate parity could I think try to become tighter, simply because we are potentially seeing some we could potentially see, some bit of hiking coming in there for the Eurozone, okay, which could help it to catch up. Now, the statement which I read was only for the pound. It wasn't speaking about the euro, Apollo. So I need to follow that up and check what is being provided for the euro, okay. But for the pound, Goldman Sachs, and again, most of the different banks are looking at tighter, rather lower pound valuations. So for gold, I've shared that, and you should be able to see that. So GBP AUD, if I'm to quickly share that one, it's really been in a downtrend. That is because of very strong pound weakness. The move that we have seen on GBP AUD has been a really, really, really tight one. where it has moved down by close to around 700 pips. Very strong move to the downside, and it's possible that this move could potentially continue. And what we could then see is we could see a break of this descending trend line there. This is for you, Diana. You're the one who's asking about GBP AUD. So we could see a break of this descending trend line. Now it seems to have broken it a little bit, and keep in mind that let's focus on these moving averages. The 200-day moving average is the gap between the 200-day and the 50-day is widening, which is then indicating to us stronger momentum as this move continues. So if we are going by the moving average, then we could see a move. Again, we expected to have a break above of this triangle here. I think it's quite clear there for you to see. You can easily see that there. We had a nice break above it, and we are expecting to see now whether it holds this break, okay? If it doesn't, which is potentially likely, then we could see this movement continuing, okay? Now, keep in mind that when you go on a higher time frame, GBP AUD is actually just in a bit, it's stuck in a bit of a descending trend there. But the moment it manages to break above here, then we are going to have it potentially moving higher and taking it back to this area here, okay? Yeah, so this is really going to depend on whether the pound can manage to gather together some momentum. But for now, there's barely any momentum, okay? Now, if you're having any issues with withdrawals, the reason why withdrawals, as you may understand, whenever there's a glitch, usually what happens is traders who have benefited from that glitch will then rush to try and withdraw their money, okay? So what is happening is we first need to ascertain who was affected by it, have those issues resolved, and then the moment every single one has been handled, then you should be able to have your withdrawals proceeding. So the reason why you can't withdraw is not because your money has been taken away or your money is missing. It is simply because we have to sort that issue with a glitch, okay? Now, if you've been affected by it, simply send an email, okay? Send an email to support@FXPesa, include your FXPesa account ID, include your order IDs, and once you do that, the email will go and then we shall be able to get back to you, okay? Okay. Okay, so Willie, kindly send through your withdrawal request and have them there. And the moment the issue has been resolved, then you should be able to access your funds. So I think aside from that, I don't know whether there are any questions. If you don't have any questions, then we can call it a day for the snapshot. And I will see you all in the next episode of the snapshot. Just Squad, there's a question I missed out here from Just Squad. Powell is due to speak tonight. Yes, we have Powell speaking towards the end of the US session at about, I think, 11. That will be, I think, 11 p.m. East Africa time. And we might or might not see really that much movement from Powell's statement. However, he might just really reinforce what he said from the FOMC conference last week. And again, it's a no-brainer really, guys. On the charts, you're seeing what is really happening. Most of the risk-on assets are really showing a lot of weakness. There is no risk-on sentiment now. It's really, it's rather there is no risk-off sentiment. It's really just risk-on right now, rather risk-off. And this could potentially continue as we go along. So I think that's it. I will see you all in the next episode of the snapshot. Oh, we have just one more person. Someone is saying Euro card. So I don't have Euro card and I haven't really checked it out. So, but what I can say for that one is, you can, I think you can just, let me see if I can get it quickly here. I don't actually have Euro card. I don't really follow it, but I would say the Canadian dollar is actually having a bit of weakness simply because of decelerating oil prices. And we are seeing that also reflecting with the kind of movement that we are seeing on on the chart. However, keep in mind that as we progress, we could see some strength coming in there. But for now, the deceleration is still quite intact. As you can see there, we're having a very nice descending triangle forming here, which has an indication that we could see lower prices coming in here. Okay. But the reason why the Euro card has been on a downtrend is simply because of the decelerating data that we are getting in from the Eurozone. And that is putting a lot of downside for any Euro card pair. And again, when you go to trading view and you line up all these different assets, you'll be able to see something, which is you'll be able to see that the weakness is actually broad. Okay. Let me just quickly show that to you also so that you can see that. If I were to get my Euro card, okay. So if I get my Euro card here, I don't know that I've shared my screen. Yes, you should be able to see the screen shortly. You should be able to see the screen shortly. Yes, so what I can do is when I get my Euro, okay, so I just simply come here and I simply come to trading view here and I just simply add my Euro. Just a moment. I'm trying to be quick here. So I'm going to add my Euro NZ, okay? I'm adding my Euro NZ, right? And then, so I have my Euro NZ there on my daily. So the smart way of doing things is that you just simply come here and then you get your Euro card, okay? You get your Euro card, add it there, right? Then you get your Euro CHF. And then I also add that there. So what we are generally seeing here, we are seeing some bit of correlation, okay? What we are seeing is that there's a potential selling coming in for the different Euro pairs, and it is across the board, right? And the reason for that is that we are seeing the Eurozone seems to be going under some bit of contraction in the economy, and that is also reflecting with the value of the Euro. So whatever Euro pair you are trading, and even again, if you're doing any kind of technical analysis, that should also reflect with the movements you are seeing there, okay? So this could potentially continue, and we could see some nice selling coming in there that could take us much lower. So I think that is all for the snapshot. Those of you that are tuning in from Kampala, please keep in mind that we have classes at the academy in Kampala. You can come for classes and we should be able to engage and, discuss better. Okay. So I think with that, I wish you all an amazing trading day, and I'll see you during next time's snapshot. See you all.